Hello people, right, it's about 4 o'clock, just after, and I've got back from doing my chores, and I noticed EJ was, Euro was weak and Japanese yen strong, so I opened this chart, and whilst I couldn't find a trade for myself, I found a good example of a H4 reversal. So this is the low, that's the high, these two are inside bars, then you've got the higher high, or high low, high high, so that is the reversal level there. I'll zoom in because we don't need to look at any other part of the chart. I hope you can see the high of that red candle there. So on the face of this, it's a very straightforward trade for about 50 or 60 pips. This is where I would, a big candle, we like those when we're looking for reversals, and actually I mentioned this in a previous video, a nice shallow reversal compared to the big candle, rather than, say for example, a reversal all the way down here. In other words, the candle that closes below the green line is a big one as opposed to a small one, because obviously if you've got a big one, you've got a very small sort of target area, as it were, distance, whereas this one we've got huge distance to the absolute very first resistance level that's potentially going to be tested as support, and that's that level there, the last one broken by this green candle. And then we've got all of these other little areas, highs of candles here, that potentially will affect where this goes down to. Ultimately, we know it needs to break below an old support level in order to continue down, but once all these resistance levels are broken as well, then quite possibly this will go down to the next level, and the next level would be the daily reversal level. So then we may have a problem before that support level with this resistance level. I'm not going to go into what we have to look at on the left hand side, because it just complicates matters for the purpose of this video, but the H4, so we would have had this level over here drawn on our charts until it was broken by this level here, and then if, as I've mentioned before, if this high was broken by another high, then we would move our reversal level up to the low of that red candle. I hope that makes sense, in which case we've got an even nicer potential reversal level going on, tighter if you want to, for want of a bit of a word. But let's get back into what's gone on here. So look how quickly that's happened, because the level has been broken, and as I've said before, we don't want to be entering the trade way over here after a load of jiggery pokery backwards and forwards. We want to be trying to get in at this point here, or as near as this point here. So vertical line on the new candle. We can't see this candle at this point, remember, all we've got is this and this. These two yellow lines are all drawn on the chart. So then we drop down to H1 and we can see the swing trade in place. You can clearly see how the support S1 has been used in this case. The pivot level S2 and S3 down here is likely to be approached. These are our two H4 lows now. So let's get rid of a bit of this junk on this chart, get rid of the moving average. They have their purposes, of course, but that's subject of another video. Get rid of the FX, the pivots. Get rid of some of these, we'll keep that green vertical, get rid of some of these. They're just the vertical lines for my sessions. I prefer them on my charts than those great big lumpy session indicators that some people use. I'm sure you're aware of what I'm talking about. We'll just leave one on there. That's 9 in the morning. So at this point here is our new candle. So we're looking at the potential for a pullback. Probably some sort of news or something was going on there which has caused this to crash. But and you always have to be aware of news. But you can easily just draw a descending trend line on here to see where your trend is. And there's your high, your low, your lower high, your lower low. Remember what I said in an earlier video today if you've watched them. The swing 3 is always this close. So to avoid any worry, you just swing 1, can be anything, 2, 3, 4, 5, 6, 3. Swing 4 is your pullback and accumulation. Swing 5 is your move to profit. Now you can clearly see what's happened here just on this one hour chart. 2 hours it's had pullback, and I think I said in a previous video you're looking for 2 swings on the pullback really. Swing 1, 2, 3. In other words, sorry, yeah, two swings. Swing 1, swing 2 is down, swing 3. Because swing 4 is effectively this one, and if it was going to reverse on itself it would be swing 5. There is never any difference to the swings. Swing 1, 2, 3, 4, 5, 3. The close below the level is 3. So you know this has only been a recent sort of way of describing how to count the swings. Swing 3 is always your break and close. So when you didn't have a pure line to talk about, you know, in other words a low of a candle, this H4 low, how would you know when the old support was broken, truly broken, with a close, if you were just counting swings like you know the Elliott wave stuff with your 1, 2, 3s, A, B, C, Ds and 5s and all that lot? This to me is much more precise. Look at your candles, forget all that stuff about swings. So swing 3 is the close, swing 4 is the pullback, swing 5 is the continuation. Old resistance is your target for the first test. So if you've got an old resistance up here, you know you're going to have to expect either a bounce or a reversal off that. So you want these gaps that I talk about. So M30, you just keep going down the time frames until you can get a better idea of what's going on here. We know categorically if we confirm up on an M30, we really need a confirmation down on M30. That's why, you know, if you're trading an H4, you want to be looking at H1, M30, M15 and all that lot. Well, here we can clearly see high, low, lower high, lower low. It's reversed on itself with a close. That green candle has broken above the red high there. Just coincidence. Well, it's not really a coincidence. When support is broken, it gets tested by resistance. That's why that red one came straight back and tested. M15, we can look at this swing back now in a little more detail. But because it confirmed up on the M30, you do need to confirm down on the M30, which is the low of that candle there. This is why this stuff, in my opinion, is far more mechanical than anything else you'll find online. So there's your swing down now, and we can look at this on the 15 minute and 5 minute. 15 doesn't really tell us anything. 5 minute, you'll start to see that 3 swing up. All of this, remember, swing 1, 2, and it's not 3 until you get there. Break that 30-minute high. And then this is swing 4, the accumulation phase in an up move. But you would have to break that H1 and then H4 in order for this H4 reversal to the downside to be over. So, and then also now you've got your new trend within a trend. That's the M30 reversal down. Below that M30 low, remember, swing 1, 2, 3. Here's swing 3, the breakthrough and close. So there's no, you don't have to count the swings there. You just know when it's closed through. It's swing 3. If it's done in one swing, it's still swing 3. we don't care. Swing 4 is the accumulation phase, swing 5 is the down move. Okay, so we've had the break and close again once below the 30. I hope you're following this. If not, go back and watch it again. Then it's pumped up back up. It's failed to reverse on the 5 minute, which is fantastic. So then all we need to do is look at the 1 minute for a potential. If you want to go down that far, just wait till the 1 minute reverses to the downside again. Here's your 3 swings again, actually, as it happens. Swing 1, all we have to do really is wait for the confirmation to the downside here, or then we can implement our RSI histo alert and just wait for the break and close. And as you can see then, all the buyers have been flushed out of the market. It's probably, let's have a look, 1184 minus 14. That was the break and close candle. Double check that. Minus 14 minus, you have to triple check this sometimes, minus 1184. That's the bar we enter on, and as you can see, absolutely no drawdown. Now, I haven't done this analysis before I got this. I've just got in, opened the chart, looked at that, and then you've had the analysis live in front of your eyes. That is the point of entry. I've explained the reasons why. Confirmation down on H4, pull back, make sure you come back into alignment on H1, M30. Pull back, make sure 15's not against you as well. M5, if it is, make sure that confirms to the downside again. If it doesn't break above, then you use the lower time frame and you're good to go. But it's important you're not trading something like this at 3 o'clock in the morning on a Friday, in the middle of the night. You want to be trading when the whole market's looking at these moves, and that's why you get the strong moves. Okay, so that was in fact to that first H4 resistance, tested as support. It was 52 pips, somewhere around that, and then down to that next resistance, 67. Okay, hopefully that has been of value to you. If you like it, subscribe to my YouTube channel and like it as well. If you don't like it, don't say anything nasty. Thanks for watching. Have a great day.